Today, we're going to focus something I usually don't do. Maybe I've only done it once. And this is looking at pricing of Bitcoin. I usually leave that to the other 300,000 YouTubers that cover crypto because they just love talking about coin charts. And I do have knowledge of that. I just don't talk about it because so many people talk about it, but I think we're getting to a point now where it's needed for someone to talk about prices in terms of perspective, and I'll show you what I'm talking about in a minute. So let's get started. You're not going to see me much. I'm just going to focus, give you more room so you can focus on the screen rather than me. How about that? So first of all, over the last month, it looks like Bitcoin finally was able to squeeze out a slight gain of under a 0.5%, so it's not much, but we finally broke over 17,000. Feels like it took like forever. The other big surprise, well, Ethereum's doing really well. It's up 4%, but the big surprise is Solana, which is up 18% over the last month. And as you know, it's been hit by a trifecta of news. So it's one news with a trifecta of bad news related to Alameda Research and Sam Bankman-Fried, FTX. There's just so much going on there. They got hit with FTX owning the keys for the Serum DApp, so they had to change the DApp. And FTX owns a lot of Solana, so they're going to be selling it, almost like whales selling crypto. So that's a huge negative. And also the total value locked in developers went down, especially at TVL. It went down. And recently, just a week ago, so the only places that were doing well was NFTs. And in that area, two top NFT companies, apps have left the Solana chain. So that's pretty bad. But now it's finally rebounding. So that's good. I think it was around $9 at the low. I think that's about it in terms of big moves. ADA's trying to make a move too, but I think they need to come out with more dApps. They need to come out with more business. You can't just be talking about your blockchain every day. Charles Hoskinson's always talking about Cardano, but he needs to get his team to execute and actually produce something that's worthwhile. Basically, some killer apps. So let's get started with the pricing stuff I want to show you. So the first one is this. These are Bollinger Bands. And the only thing I want to focus on here, so this is Bitcoin going back to August. Only thing I want to focus, so it's a short-term chart. And the only thing I want to focus on is that there's a tight Bollinger Band. And usually that means there's going to be a big breakout up and down. I'm guessing it's going to be down. And right now we're literally at the edge of the upper range of that Bollinger Band. So maybe we'll go up to 18,000, but then it looks like there's a high probability of us going lower. And then the next one I want to show you is a point and figure chart. And point and figure charts are really good because they don't know much about time. They just know about movement. And so the point and figure chart is not good. It's not good because if you look here at the last 6 red circles, we broke the base. And when you break the base area here, it means we could go lower. So that's a really bad sign. If you go back here, you can see those red dots, those red circles, they broke the base at 29,500 and then we tumbled. And then he broke the base again back here at 40,000 and then we tumbled. And then broke the base again and it tumbled. And it broke the base again at 58,000 and then it tumbled. So it basically gave the first sell back here in November 21 at the peak. So it did a very good job. So point and figure does very good work, especially with long-term charts. Don't mind the baby screaming and mumbling in the background. The next one is the stochastic. The stochastic is showing that there's a lot of relative strength, and we're seeing that especially over the last few days. And you can see that in the bottom here too, where it says RSI 14. And you can see we're at the highest peak since November of 2022, so over a month. And the next one is comparing the 30-day moving average, which is orange, with the 200-day moving average. And you can see the 30-day moving average crossed over the 200-day moving average in December. And so it gave a sell at that point, and it's been at a sell the whole time. And the next one is a short-term chart, and it's just showing, let's give it this. It's just showing the basing that's going on, and it's trying to break out. And the last one is one of the most important charts, and this one is showing the drawdowns, all the major drawdowns, basically since Bitcoin had its birthday on, I think it was it January 7th, something like that, January of 2009. So the first big drawdown occurred here in October of 2011. It was down around 90%. And then we had another drawdown in 2015 of about 85%. And then another drawdown in end of 2018 of 82%. And then the last drawdown has been about 75%. So this is one of the most, I think it's the most important chart, because this chart here is showing what the average bear market has done. So, we don't know what a bear market is in anything until it occurs for a few months, until you get a price action of maybe down 20%, and you get a few months of a downtrend. So now that we know it's a bear market, we need to ask the question, how long and for how much percentage does that drawdown usually occur? And so if we look at this line here, where my pointer is, it's about 80%. So it looks like we can go down, on average, we've gone down about 80%. However, and this is the most important point within the most important chart, it's this. Since the birth of Bitcoin, we've been in liquidity mode in terms of interest rates and just overall liquidity of the market. I mean, there's been some instances or months where liquidity was tighter, but it was never tight. So in 2018, there was a mini tech wreck where all the cloud and long duration stocks and crypto declined, but rates didn't go up much, and the liquidity did not tighten as much in 2018 as it is now. So there's huge tightening now compared to any period in history. So because of that, and also because we've gone lower. I was going to say much lower. We went much lower in 2011. But like I said, because we never had a liquidity tightening the way we have now, and because we went so much lower in 2011, I think we can go down to between 85 and 90 something percent, maybe 85 and 91%, something like that. But we can definitely go down about 85%. So I think you should keep that as a placeholder for where we could be. And so today I showed you price charts, right? Like what the price of Bitcoin is doing. But then you need to look at on-chain metrics and sentiment data. If you use all of that data together, and including production costs for miners and the hash rate and difficulty, if you do put that all together, and then you look at the stock market, because the stock market looks like it could go down much more if earnings estimates decline, if there's a recession. So again, if you put all that together in a holistic, whatever you want to call it, all-in manner, where you're looking at everything, you're looking at all the dots, and you're looking at them all together, and you're taking all that data in together, and you're synthesizing it, and you're thinking about all that data, what you come to conclude, at least what I conclude, and we're on this crypto journey together. I'm learning, you're learning, we're all learning. But what I'm concluding is that we're near a bottom, but we're not at the bottom, and that's because there's still there's still some on-chain indicators that are saying the Bitcoin prices can go lower. Well, thank you all for listening. And if you have any comments or what you would like me to hear you talk about anything else, please let me know. Thank you. Bye bye.